Hey folks, welcome back to Whiteboard Invest. We're going to check out some highlight news in the videos right now and see how these news affect different coin prices in the market. First off, let's talk about Michael Saylor's comment on the spot Ethereum ETF approval and how it might actually be better for Bitcoin. Next up, let's take a look at the top-performing cryptos this week. It's been quite a big week for Pepe. Meanwhile, we've got Aptos hitting an all-time high in user transactions. Oh, and just a friendly reminder, we spend a lot of time on our daily research to help you avoid wasting time collecting and filtering helpful news in the market. So make sure to stick around till the end to keep yourself informed and stay sharp in this mind game. Dive into the details right away. Michael Saylor, the founder of MicroStrategy, has shifted his perspective on spot Ether ETFs. He now argues that the recent approval of these ETFs by U.S. regulators is actually great news for Bitcoin. In a chat with Bitcoin podcaster Peter McCormick on the What Bitcoin Did podcast, Saylor explained that the approval of these ETFs adds another layer of protection for Bitcoin. He believes this development strengthens Bitcoin politically and financially, as it now has the backing of the entire crypto industry. Saylor thinks this will spur institutional adoption, with investors who were previously hesitant now recognizing crypto as a legitimate asset class. He predicts that while capital will flow into various crypto assets, Bitcoin will still capture the majority of investments, being seen as the leader. According to him, mainstream investors might allocate around 5% to 10% of their portfolios to crypto, with Bitcoin making up 60% to 70% of that. Interestingly, Saylor admitted that he didn't always think this way. Just a couple of weeks before, he believed Bitcoin would be the only crypto asset to get such approval from Wall Street and the SEC. He thought that other cryptocurrencies like Ether, BNB, Solana, XRP, and Cardano would be classified as securities, preventing them from being included in spot ETFs. His change of heart caught the attention of the crypto community. For example, Joe Carlasare, a Bitcoin commercial litigator, noted Saylor's shift in opinion, and crypto analyst Ricky Bobby even speculated whether Saylor might start buying Ether. This change in Saylor's tone shows just how quickly perspectives can evolve in the fast-paced world of crypto. The recent approval of Ethereum, ETH, exchange-traded funds, ETFs, by regulatory bodies is a big deal in the crypto world. However, veteran trader Peter Brandt is sounding alarms about potential disasters in the crypto staking sector following this development. On May 24th, Brandt took to social media platform X, formerly Twitter, to predict that the biggest disasters in crypto will come from staking, potentially leading to significant financial losses and bankruptcies. Brandt's warnings aren't new. Earlier this month, he forecasted a severe SEC crackdown on crypto staking, describing it as a bloodbath and illegal as hell. This followed the SEC's unexpected approval of 8-spot Ethereum ETFs, which caught the crypto industry by surprise. Interestingly, the SEC has not clarified if Ethereum is a security or a commodity, and none of the approved ETF applications included staking, indicating regulatory caution. Brandt explained that staking involves owning, borrowing, or leveraging assets like Solana, SOL, and Ethereum to earn revenue, often through interest. He warned that increased staking could attract more scrutiny from authorities and compared it to failed Ponzi schemes. He cautioned that new regulations could change the crypto landscape or end staking altogether. His predictions sparked debate in the crypto community. Many dismissed his warnings, arguing he was exaggerating the risks. Critics clarified that staking secures the blockchain rather than merely lending assets for interest. The future of crypto staking is uncertain, with potential risks from increased regulation. The approval of Ethereum ETFs marks a turning point, but also highlights the complexities and uncertainties ahead for the crypto staking sector. This week was particularly positive for most cryptocurrencies, with Bitcoin maintaining a strong performance around 69K. The hype and actual approval of spot Ethereum ETFs in the United States really boosted the market. Among the top performers, we saw big gains from Uni, Pepe, LDO, and ETH. Bitcoin itself had an interesting week. Last Sunday, it struggled to stay above $66,000, even dipping below that level a few times. But things turned around dramatically by Monday's end. Reports about the SEC potentially approving 8 spot Ethereum ETFs sent BTC soaring over $5,000, almost hitting $72,000 for the first time in 6 weeks. Although it couldn't hold that peak and dropped to $66,400 before the SEC officially approved the ETFs, Bitcoin bounced back to $69,000 by Friday and kept steady over the weekend. Its market cap is now close to $1,370 trillion with a dominance of 50.3% over other altcoins. Ethereum's native token also had a fantastic week. ETH shot up from $3,100 to over $3,900, its highest price since early April thanks to the ETF news. Even with some volatility, ETH ended the week close to $3,800, marking a 22% gain. Uniswap and Pepe were the real stars among altcoins. Uni skyrocketed by 44%, reaching above $11, while Pepe hit several all-time highs. Meanwhile, Doge, Link, and APT also saw impressive weekly gains. Not all cryptos fared well, though. SOL, TRX, TON, and ADA were in the red on a weekly scale. Still, the overall crypto market cap gained more than $200 billion, now standing above $2.7 trillion. In summary, this week's market was driven by the excitement and approval of Ethereum ETFs, which significantly boosted Bitcoin and several altcoins, even as a few lagged behind. The overall sentiment remains positive as the crypto market continues to grow and evolve. Oh, by the way, the content in our video should not be considered investment advice, just for entertainment only. Investing is speculative. When investing, your capital is at risk. Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. Pepe, the meme coin featuring the internet's favorite frog, has been on fire recently, with a 100% gain in the last 30 days. Investors are thrilled, and data from Into the Block shows that 97% of them are in profit. Pepe's price hit new highs, and it's now the third largest meme coin by market cap after rising 56% last week and 99% over the past month. The excitement around the SEC's approval of Ethereum ETFs played a big role in this surge. Social media is buzzing about Pepe, and a major investor, or whale, just withdrew 500 billion Pepe from Binance, signaling strong confidence in its future. Despite all this hype, some analysts are urging caution. Technical indicators like the Chaikin money flow and the relative strength index suggest the market might be overheated. Sentiment noticed more Pepe flowing into exchanges, hinting that some investors might be cashing out at these high prices. NewsBTC predicts that Pepe's price could drop to $0,122 before possibly bouncing back. But a deeper correction could see it fall to $0,010 or even lower. Even with these warnings, Pepe is still one of the most traded assets on Binance, just behind heavyweights like Bitcoin, Ethereum, and BNB Coin. It's the top meme coin in trading volume, outpacing Dogecoin, Floki, and Shiba Inu. So, while Pepe's recent performance is impressive and has garnered a lot of attention, both positive and cautionary signs exist. Investors are advised to stay vigilant and consider the potential for a market correction amidst the ongoing frenzy. The Shiba Inu ecosystem has seen a notable uptick in activity on its Shibarium network, with transaction volumes jumping from 5,150 to 7,130 in just 24 hours, a 60% increase. This spike has also led to a rise in network fees, with the amount of BONE tokens used doubling from 16.68 to 32. According to Shibarium's transaction model, BONE tokens used for fees are partially converted into SHIB and burned, reducing the circulating supply of SHIB and potentially boosting its price. Recent market volatility has fueled investor interest in Shiba Inu tokens, leading to more transactions on Shibarium. Active accounts on the network have increased by 13.7%, from 687 to 781, indicating that existing users are driving this surge in activity, even though new account creation has slightly declined. This combination of rising transaction volumes and systematic SHIB token burning is likely encouraging SHIB enthusiasts to stay engaged and continue investing, suggesting a potential for future price growth. Aptos, a blockchain platform cooked up by some ex-Facebook folks, just made some serious waves. They smashed Solana's record with a whopping 115.4 million transactions in a single day. And you know what fueled this frenzy? A quirky little game called Tapos Cat. It's a simple tap-to-earn game where you can tickle a virtual cat and earn some heart tokens. Believe it or not, this game racked up a cool 10 million transactions on its very first day. Now, while some folks scratch their heads wondering about the point of tapping a virtual cat, others see it as a genius move. They say it's like Aptos flexing its muscles, showing off what it's capable of, and hinting at even bigger things to come. But Aptos isn't just about tapping cats. They're on a mission to make decentralized assets accessible to everyone. And they're not just talking the talk. They've been making moves, like teaming up with SK Telecom for a Web3 wallet service called T-Wallet. Plus, they've got some heavy hitters on board, like David Lowy, former bigwig at Google. And here's the kicker. Despite all this action, Aptos has been keeping things smooth and steady. They've managed to maintain stable gas fees and success rates thanks to their nifty aggregator feature, which handles multiple transactions at once. So yeah, Aptos might seem like it's all fun and games with Tapos Cat, but underneath it all, there's some serious tech and ambition driving it forward. And who knows? Maybe tapping virtual cats is just the beginning of something much bigger.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.